Hello, everybody. Thank you for coming back. So, today's episode is going to be about permanent life insurance. It's Ginny O'Leary and Rhona Canelli on the Canelli Consulting YouTube channel, and we are partners for positive change in the Canadian insurance industry. So, permanent life insurance. If any of you are thinking of tuning out right now, I would say please stay on with us because certainly in my own experience, I thought, permanent life insurance, it's just insurance that actually costs more. The protection piece is also there, but I don't know if I'm interested. But I will share that my experience has been there is a lot of value in having a permanent life insurance plan because it's not just about the protection, it really is an asset class. So I am now going to turn this over to Rhona Canelli.
It's great to be back with you again. It's really interesting, Ginny, that you raise a really interesting point about today's topic that maybe people might want to tune out. I don't know if this is something. Would you agree that we are in an age of misinformation? In addition to that, when you think about permanent insurance, I don't think a lot of people that I've met over the years really understand what that means. And then there's the perceptions and the biases that come in. Think of all the noise when you think about insurance and it comes to insurance that has living benefits. Wow, it's an asset that has living benefits? Because most people think, oh gosh, I'm going to be dead anyway. I mean, what's the point? There is a total lack of understanding about insurance that has living benefits. And I like to refer to it that way because it keeps people's mind focused on what's the value to me, not just what's the value to the survivors. So if we go back to basics, and Ginny, you and I can tag team on this a little bit. When I think about explaining how insurance works for what's out there, I would draw a visual. And that visual would be, okay, let's take your age now. And what do you anticipate your life expectancy to be? Many people can't really answer that question. Well, let's just take what the average is in Canada, which is about 84 for women and 81, 82 for men. I'm just paraphrasing the last statistics I saw about the where in Canada is the longest living individuals. Let's just say Canada, but let's just say 85 and 82. When we think about where insurance would fit in that scale, would you believe that there are 5 to 7 opportunities as your life evolves where the need for insurance is going to change? So when we think about what we've been talking about up to this point, the past episodes, we've talked about why it's important to have an insurance review, what you should be expecting from your advisor in terms of ongoing service. We're going to be touching on all the riders and the features and the benefits of all different kinds of insurance in upcoming episodes. But when you think about an individual that may say to you, well, you talked about that term insurance that I could buy when my kids were young or when I had a mortgage or I was starting a business. But what if that need changes? Then what happens to that insurance? I guess I just cancel it. This is the beautiful part about understanding the different ways that insurance works, because many people don't realize that under the current tax situation, there's a way for you to save within a permanent insurance policy that will allow you to have the insurance fully paid up at a certain point in time. It will allow you to share in the profits of the insurance company by being a shareholder of the insurance company, by earning an annual dividend on that policy. And it gives you a point in the future where you're able to say, well, okay, that need has come and gone. And now I've maximized my RRSPs. I've looked at my tax-free savings account. I may or may not have a group savings plan where I work, or maybe I'm an entrepreneur and I have nothing but my RRSP, and people are looking for alternative ways to save money for the future in a tax preferred way. And this is one of the things that I find is so helpful, is to help people understand what the benefits would be of taking permanent insurance versus term insurance. And maybe, Ginny, you can touch on the opportunity where people can actually package that together.
Yes. So, Rona, one of the things that I was going to actually share when you were talking about the opportunity was really many of us like to take a look at all the things that we own and that we value and feel that, for the lack of a better word, we have a deal. We have a deal on something. So I would say to the audience, as Rona talked about packaging it together, is think about everything that you own, that you value, that you felt was a good investment for whatever reason it is that you used it for. That same perspective applies to insurance. And she earlier talked about, we mentioned it's an asset class, it has living benefits. So think about that in itself. It's like a two-in-one value. And as she goes on to explain this, I will say there is absolutely room for term and permanent, a combination of both. And with that, you also are able to include the living benefits protection. So now, as a value package from an affordability perspective, you have the best of all worlds. So I'm not trying to lose anybody in the audience, but what I am trying to heighten your interest and be curious about is that this topic of permanent insurance and the value it brings to you in your whole life for different events, potentially health events, estate planning events, and of course, the pure life insurance protection all exists. So that's the Ginny version, which was all rolled in one. And I'm going to turn it back to you, Rona, to
Mhm.
unpackage that.
Yes. Well, you raise a really good point from the perspective of many people feel that the cash value growth inside a permanent insurance policy, which is where we drive the living benefits, which is where there can be access of that cash value in the event of a disability. There's so many opportunities, and many people think that's not, well, I looked at the cash values, and if I was to take the same money and I was to put it into an alternative investment, how would it compare? We need to let you know that insurance is not a buy it and forget it solution. So when you are taking a step back and saying to yourself, and for those who are listening, maybe they already have insurance, maybe they don't. For those who already have insurance, maybe I would say the bigger percentage of them have not really had a lot of proactive communication from the advisor. And at the end of the day, they're probably, if they're watching this, saying, gee, I wonder if I have the right insurance. One of the best things to do for those watching is to take a step back and look at all of the assets you have. What are geared to be assets you will use in the future, and what are for investment purposes? How liquid does it need to be? And what's your comfort level with risk? Most investments that have the return opportunity are going to have a risk associated with it. And not everybody has the stomach for that over the long term. But if you're prepared to be dedicated, you and I can chat about this, Ginny, if we have time, but usually I would say it's going to take at least 10 years to put money into a permanent insurance policy for it to provide rewards and values over the long term. And the best part is that that growth is not taxed. Under Section 148 of the Income Tax Act, you can add additional money over and above the cost of the death benefit up to a maximum, which the government deems as an eligible insurance asset, not a comparative investment asset. And it'll hum along, no tax on it. So think about this. It's money that's never been taxed as it grows. And when you pass away, it pays out tax-free. So what other asset allows you to do that? This is about diversification. So your advisor is going to sit down with you, look at where you're at in your life, make sure that you have enough money to do what you need to do, and with any residual money. And I mean, this is a great alternative for somebody with a corporation. who's looking for a way to tax shelter some retained earnings rather than be taxed at the highest rate on their safe money. We can reposition some of that money, but it's having a true insurance professional who can look at all of the investment opportunities that are available to you and help you make an informed decision, and not to discount or overlook the benefits of a tax sheltered permanent insurance policy, not just for now, not just for the death benefit, for what it can deliver in the future if you have a life altering event where you need to access the cash in it.
So I am going to share that those were very key points. So I am hoping you're all listening. And if anyone out there has a corporation, that is one of the biggest values for permanent life insurance. And I've seen it throughout my whole career. I've worked with Rhona. I've partnered with her together with my colleagues, and we've seen her work on these cases, especially the business owner ones. I will also say that tax-free growth inside the policy is something that I feel, in my experience, maybe a message that many of you haven't really heard, or perhaps you kind of heard about it, forgot about it until we're now in front of you. And I would say, really, that is what ties it into the fact that my personal belief is it's a true asset class. Just the same way your investment advisor diversifies your portfolio based on your risk tolerance, which is what Rhona had mentioned, you are in different investments. And the higher the risk, the higher the return. But how about now taking a different view of this plan and saying, this is actually a part of my life portfolio. I have my investment portfolio, and I have this as a separate asset class in my life portfolio. Because over here, it is conservative, consistent growth, accumulating tax-free over a period of time. And if and when I need to access this money, it's there. And I get a statement on an ongoing basis talking about the growth in that value. And Rhona's really the expert on rates of return, by the way. My focus is,
well, I don't know. I don't have a crystal
benefit.
ball. I guarantee you people be lined up if they knew I had one of them. But you know, one of the questions, Ginny, I get asked a lot and have been asked a lot is, what kind of insurance should I buy? I mean, what if I'm a younger person that's just trying to get myself established in today's crazy financial environment? Should I have term insurance or should I have permanent insurance? And the question back to you is, you want to get enough information first to make an informed decision. When you're younger and you're trying to build growth for the future, permanent insurance in its entirety may not be for you right now. You may be, and even a young entrepreneur should get as much term insurance as they can qualify for and afford, because at some point in the future, you're going to have residual savings. Let's hope you do. And perhaps you have a corporation, and perhaps you've taken advantage of every tax sheltered opportunity you can. And you want to make sure that you're having an annual review of your insurance needs, and that's mandatory. You can expect that from your advisor. You can ask for that and ask them about their perceptions. Remember, I said it's perceptions, biases, misinformation. You can reach out. So, I mean, we should maybe talk about that. How do people find us to ask a question? They can make a comment. You can subscribe. We would love to hear from you. If there's no question is not good. So we look forward to seeing you next time, and we're going to expand a little bit more on permanent insurance and be more specific, but we're so glad you joined us today. Thank you, Ginny.
Thank you, everybody. Thanks for being here. We're going to see you next time. Bye.
Bye.